Hello everybody, welcome back to my YouTube channel. And this is CandleMind and my name is Sino Shadian and I'm here to every day analyze the market for you on 5 minutes time frame. So let's begin with the first day, and I know today is the beginning of the day and you might be a little excited about what's going on the days forward. So just sit tight and see what the results are. So I'm gonna just begin with the last trade I had on the last hour on Friday, on previous week on EUR USD. So let's see what happened and what was my analysis about this trade and why did I took it generally. So if you remember, it was exactly on this candle which I shorted the market. And the reason was that after this exhaustion gap, when it was broken down at the end of the third move of this channel, 1, 2, 3, I realized it is over because the gap was instantly covered by sellers. And also after the third touch, I somehow wait for more corrections. And if I consider this coverage by the shorts, the first leg, I should expect the second leg. This is what usually happens because it's so natural in the markets. So, and something else I know, after I saw this leg, I realized this leg is only a small leg, maybe in a bigger leg. And sometimes market does something, for example, a big sharp leg, and then it forms a correction and two tinier leg in the same direction. So if you just see it here, this is the sharp rally down, covering the gap by sellers. And this is the first tiny leg, and this is the second. And I shorted market here because I knew it is going to somehow touch this level, and this is what exactly it did. And these two small legs are play the second leg for this market structure. And guys, a structure is highly important. If you don't know a structure, you don't know when to enter the market and when to get out, and it must be so frustrating. And I've been in this cycle for so many years. I have lost money a lot. I've been depressed sometimes. I was depressed sometimes, and I didn't know what to do. And the only thing that kept me into the market was the money management and the passion for learning trading, because I knew it is the best job that fits my personality. So just be patient and learn the market cycle and each structure. So it's going to help you how to trade where you are. Then you can just sit and think that you're just watching a movie, when to enter, when to go out, and do whatever you want. Just market is a order, is a river, and you have to just know when is the best time to jump in and to get out. So and if you remember, for the last comment about the previous Friday, this was the channel here. And when it broke, I told you, if this rally continues down, it's going to somehow touch the bottom of this channel, which is here. And look just what happened in the beginning of the day. So it just dropped down to this level and then started creating a bull channel. I just assumed that there were a lot of traders who had put a buy limit order here and to go long, because they knew that the beginning of the channel is going to play a significant support level, which it did here. There's 3 candles. So let me just a little zoom in. to just work on more details deeply into the structure of the market. So these three bullish candles just opening on the low and closing on their highs with just a small tiny shadows tells the exact story that a lot of market buy limits has been somehow triggered. That's why this rally up has been formed. Okay, so and we know that every spike, which we call it a spike, without any correction or somehow pullback, like here, this candle, which is the first pullback in the day, and this spike is the first leg. And if you just measure from the top of the spike to the bottom of the spike, this is my spike down, and this is the top of my spike. Most of the time, I use the close of the first candle to the close of the last candle, because it is the best safe place to put your profit target level. Okay, and look just what happened. Let me just show you. So this is if this was your entry point, you had gone long and you had put your stop loss down here, you could just put your profit target for the possible second leg, which always, not always, but most of the time it is 80% of time it forms the channel, and this channel is a slower move of the spike, so it takes time. You should give it time to put your profit target here. And if I had just put my profit target here, if you see, it's somehow not by accident, it is all math, which computers do. Okay, so it is the place that a lot of profit targets might be. And I personally put my profit target just right here above the top of the channel, which I expect it must be also the third point of the channel to be touched, but it didn't. Let me tell you why. So the first touch of the channel, which is the top of the spike, the second touch, and each time that the channel touches the bottom, if it touches again the trend channel line, you can call it the second touch. So all in all, these two touches are the second touch, and then it forms a small trading range to give itself time to see what it is going to do. So it's going to touch the bottom of the trend line here, and then moves towards the third touch of the channel, but it didn't. Why? There is a reason for this. I believe here lots of traders have gone out before market touches the top of this channel. So the best strategy here is that if you see this spike and you have gone long here, or here, and you have put your stop here, it's always wise to take profits after it just breaks the top of the spike. Take a little profit. Okay, so if this is the first, the second, just draw a line just like me here from the first touch to the second touch, and see what is the other place, what is the possible third touch of the trend channel line, and just take a small profit, because you don't want market to take anything back, your hard earning money, because it's so difficult to be in a position and to be in profit and lose it all and be even, break even. It's so difficult, and it just it just drives you crazy sometimes. That's the reason there is a psychology behind this, what I'm telling you, because you have to be mentally always prepared, because this market is crazy, and sometimes it just does some unexpected things that might shock you. So something else about this trend channel line that it didn't get touched on the third move is that before market entering to this place, look what has happened. It has formed another slower channel outside in it. So this is the first push, third push, second push, sorry, and third push. And look what happened to the third push. It is just a break out of the channel by this bull candle, and then just it drops down below it. And this is an outside bearish bar, which shows that sellers are strong, and this is a failed breakout. And whenever a failed breakout happens, it tells us that it's going to most of the time touch the bottom of the channel. So if you just see this here, let me just redraw the line. Okay, so if this is a smaller channel into a bigger channel, so 1, 2, 3, third push, okay, it breaks above and then it touches it here. Okay, so it touches the trend line, and it even touches and breaks below the bigger line. So when this is the case, and these series of sellers have been able to create 5 consistent bearish bars, it just tells me that it's over. We have entered into the trading range, which is always the case. Do you remember the market cycle? Market cycle is consisted of 3 parts: spike, channel, and trading range, which you see here. This is the spike, the first leg. This is the channel, the second leg, which is a slower move of the spike. And then when it breaks below the trend line, below the channel, we know that it has entered into the trading range phase. So I'm not going to just look for buy setups. I also look for short setups. So buy low and sell high. That's the strategy. So let's just see what has happened after that. After shorts, after the sellers have been able to create such rally down, and the first moving average gap bar, which is this bullish one, every 20 gap bar after bars are above the trading range, it becomes the first pullback and the first bar that comes below our moving average, and it tells me that the channel is over. So I wait patiently to just short the market, because I know somewhere market is going to reverse down, and look for the second leg, because this rally down is the first leg. And just what happened here, the first rally, sorry, which is the first leg, and 2 other legs, which to the second leg, which has consisted of 2 legs. Okay, and this, we have the same story here: first leg down, correction, and then 2 smaller legs here. So the first smaller leg, the second smaller leg. So all in all, let me, if I just measure this, oh, I have done it already. So if this line is the first leg, I'm going to somehow expect the second leg. So if I were in the market, I would have taken this short, but it's not safe. And these 2 other bearish candles are more safer place to take the short, specifically this one. Why? Because this is the second signal, or this one is the second signal of this signal. After the channel breaks, market goes up again. So whenever the channel breaks, don't go short immediately. Sometimes market rallies up because there are a lot of buyers out there who just want to get out of the short line positions immediately. And there are also a lot of people who just short the market, but they look for the better prices. So there are a lot of people who had gone long here to take this part, but somehow they realize, oh my god, that was a total misunderstanding, and the market, then they just wait for the best place to get out, and sellers also wait for the best place to short the market. And if you see, when the market just touches above this channel, this bullish candle, it just immediately start to sell off. And when the sellers also see this candle after it reaches here, they find it's the best opportunity to go short here, and they put their stop losses here. So if I were a trader who wanted to short the market, I would just put my sell a stop below this candle, and I would definitely put my stop loss above this last higher high. Okay, so then the market forms, here above the last higher high. Then the market, I assume, when I do this, I assume this might be a lower high, and market then it is going to just form other lower lows, lower highs, which is the case here. If this is the lower high, this is the lower low, lower high, and lower low, which is the second leg. This is the second leg of the first leg. So you see that leg 1, then leg 2, and it is finish here. You can measure the first leg, and when it just forms its lower high, you can just measure the first leg and bring it from that level to this place to see what the profit target place possible might be. So if you see, if I just had taken my short here, I would put my profit target on this level. So let's see what happens after that. Take a look at this here, guys. Market just comes down, drops below this level, hits the profits, and it starts just rallying up again and touching the top of the trading range, which is the third part of the market cycle. Beautiful, right? So after it touches the top of this small trading range, what happens? If you see, the market sucks up, down, and drops down again. And this is where the market once had been able to break the bottom of this trading range. These lows are the bottom. So if it has been able to break it once, it can do it again. Okay, and if it does again, the odds are that it is possible to market just rally. You should measure the bottom of the trading range to its top and just go short and take your short positions, take your profits just to the voids of the trading range, which it did here. So let me show you. If I were into the market, when the market comes up here, I'm going to put some sell limits here, put my, again, profit stop loss up here, which is the last low, last high of the day, and also it is the high of the day after maybe 2 or 3 hours. So I'm going short. Then just look what happens, guys. Let me just measure the voids of this trading range, which is from the bottom to the top, which is this blue box above. You could even measure from this level to this level, which is more possible to be hit by the market. Why? Because it is also the bottom of this trading range, this channel. And guys, every channel is a part of trading range. So if it's a part of trading range, and we can consider it as the bottom of the trading range. If it's the bottom of the trading range, you can expect, if smaller trading ranges just form above the channel, if the trading range can't hold the market, it's going to drop to the next level, which is the bottom of the channel. So this place, this place is broken, so it couldn't hold the first trading range, and now it's going to form a bigger trading range, which is the distance from this level to this level, which is the bottom of the channel. So let's just see what happened. This candle just triggers a lot of short stops, and this is the result. See, If you just had gone short here or here, in the case we said our stop loss above, it was just going to hit lots of targets here, our targets here, and lots of other traders' targets have been hit. Not it had just been hit, but also it had just dropped below. And what's the reason behind this? There is a very cute reason here that market have dropped down. If you remember the previous day, very good strategy here is, so this was the beginning of our channel on Friday, and I told you if market drops and continues down, this is the first level that is going to touch, which it did here, and it is the first candle of the week that opens, and also the first candle of the day. So I always consider the first candle of the day and week a very significant level that you have to consider for the other days. And this is what has happened. So a lot of traders believe so. So they're going to just put their profit targets also to this level, and there are no buyers. They just they are frightened to put buy limits on this level. Okay, that's why it happens. And something else, if this place holds the market, which has held the market on Friday, once again today when the market opens, if it holds, the price action just is going to tell you, but there is no price action for me telling me that the market is going up. If that was the case, I would have definitely taken this trade, which I didn't, because I didn't see anything here. So I'm going to do the opposite. So just be smart. In this market, you are just competing against the most advanced, most professional traders in the world. Some of them have been in this market for 40 years. So it's not an easy thing to do, competing with this monsters, better say. So when market does this, what is my strategy? My strategy is that if I consider the bottom of the day, the beginning of this spike, and if this bearish candle, the top of it, this bearish candle was the high of the day, and when this level is broken, the bottom of this is broken, I'm going to measure from the bottom of the day to the top of the day to see what is the other level that the market is going to hold, or professional traders have put their profit targets to just take their profits. Okay, so this is what I'm going to do. I'm going to measure from the top to the bottom of this candle, which is here. So all in all, this one is the my measurement. So I should expect the other move to see what's going to happen. So let me just see. Okay, I'm going to drag it here. This is the first place and this is the second place. Then I'm going to measure this level and see whether if I had gone short here on this inside bar candle, what would have happened. And I'm going to tell you guys, don't worry, I'm gonna tell you why this one is a good short setup. So let's what happened. You see, this just exactly is going to hit your profit target, and not just that, but also it passes through it. So when it passes through it, I do something else. I'll look for the other level. Look what happens. So if that's the case, I'm going to just consider the other part. Boom. That's it. You see how beautiful this market moves? Why? Because only computers are behind these trades, and the professional traders follow their footsteps. That's the reason. So let me tell you about something about this trade that if I were in the market, I would have had taken it. So I said this candle right here is a good short setup. Why? And why the form is like this? Why after such rally down, this big candle, it has been formed here. When the market comes down, Okay, lots of sellers take their profits and lots of buyers go long here, okay, to see whether the market is going to touch the open of the wick and the day or not. That's why market goes up, and then look what happens. The market pushes up but can't make it to close near its, the candle can't make it to close near its high, and it reverses down. That's a sign of weakness for me. That's a sign of weakness. And the reason is that if this is a rally down, this is a pullback in lower time frames, which it is the 5-minute time frame here. So in, for example, the 1-minute time frame, let's have a look on it. This place exactly. So, oh, sorry. So if it goes down here, this is a pullback, and after this pullback I just wait and just take this sell again. So let's look again on 5-minute. This just is the pullback on a smaller time frame here. So something else, I would just put my sell limits right here, and second of all, I'm going to put another sell a stop on this candle after, and the level would be here, the level that I'm gonna put my stop loss, sell a stop, because I believe if the market pushes up here and can't just form other series of higher highs and higher lows, it means the bulls are seriously weak and the market's structure has changed and lots of sellers are in the market. So I just want to trade in the direction of market. That's the reason. And if I ever go long, I'm gonna see some signs there are strategies behind it. All right. So if I had gone short here, my stop loss would be here. Let me just show you how I do it. I'm gonna short the market here. This is my entry and this is my stop loss, and see what happens. First, this is my first profit target, 1.5 profit target, second, third, and I told you if you just measure from the bottom of the day to the top of the day, which had been holding for a long time. So it's a good confirmation for me that this level is not going to hold. Okay, so I'm going to measure the first part, the second part. You see these are 3 steps, and if it touches here and breaks it below, it's so possible, Justin, for 80% or 60%, you can be sure that it's going to touch it here. So you could just take some profit here and let the market to just go lower. If on the way it forms another lower high like this, and then it breaks it below, you can put your stop loss from here and remove it to this place and take your profit target and get out. Let's just see what happens here. This means a lot of buyers have taken their profits and got out of the market, and even the candle couldn't make it to close the market below this third level. That's really beautiful. Something else. We know something about market cycle, which starts always with a spike and then channel and third trading range. So let's just see what has happened. This big rally down, which is consisted of 2 legs, the first leg, the second leg, no pullbacks from top on its way until this candle. This is my first spike. And this one is my channel, which is the second market cycle element. And we know each channel touches the trend channel line for 3 times, which is the case again here. And then it breaks from the top, touches the moving average, creates the first gap bar after, this is the first gap bar after 20 bars. Okay, and just creates the second gap bar, which is the second more reliable. So I'm gonna just put my stop, sell a stop below this candle and short the market. Then look what happens. So guys, when I'm here, I know that the cycle has broken the channel. We are in the third phase of the market, which is the trading range. So I expect that it's going to form the trading range, and if this is the bottom of the day, I know it plays a significant place as support level. Let's just see what's happened here. It comes down, forms a small double bottom, which is this one, which is another signal for a good buy. This one here, small double bottom, and you could just have gone long again here and put your stop loss below this level. So low of the day, market is in a trading range, and this is the top of this is the beginning of the channel, which plays as a sorry, sometimes the things happens. So this plays a significance level as in the beginning of the trading range, and also I'm going to measure this part. So this is my possible trading range area. So I'm gonna just sit patiently and see what happens in such levels, and I'm gonna just stick to my strategies, and I never just put a step further from my strategy. This is how I can trade comfortably, and I recommend you to do so, because if you want to just stay in the market for many years, you have to learn patience, and I have learned it from it. And market just educated me to be patient. Okay, so this is the place. Oh, let's look just what happened. If this is a trading range, yes, these are the other possible to buy low and sell high, other touches of the trading range, 2 touches. Now it's coming down. So now the other place that it is going to touch is this place. As long as it is in the trading range, I just can sit comfortably and trade it. Now just let's see what's happened. When the market is forming series of higher highs and higher lows in trading range, this is a strategy I'm telling you guys. So when it just reverses down, and you know that we are in a trading range form, let me just write it. Trading range. Okay. This is our trading range area. I prefer yellow because it is more visible to the audience. So I'm gonna just, when this happens, I'm gonna just buy the pullbacks. So it comes here, I'm gonna buy, put my stop loss below. Comes down, I'm gonna buy, put my stop loss, below the trading range. But I'm not gonna buy this, guys, because the risk to reward ratio is going to just be something that is not my. So if I had bought this, I had to just put my profit target here, which is not the case here, because I know this top is going to hold the market. This top is a resistance level, as it has done it here, and it has been here. Okay, so but this one, this lower lows, you see, if I had taken my long setup below this level here, I could just put my stop loss here. My profit target had been taken. And if I had just put my stop loss, had taken this correction and had put my stop loss here, I had taken my profit target for this 1 to 2 risk to reward ratio. Okay, so that's the case to trade the trading ranges. Now, let me tell you something about this. Now, the market is forming lower lows. So, isn't it, if that's the case, if that's the strategy in trading ranges, wasn't this a clear short setup and putting my stop loss above this high, because it is a part of the trading range? Definitely yes. So if it just forms again another low, for example, let's consider if the market pulls back to this level, which is the actual trading range, moving average 20, it's going to also play as an resistance level. So we're going to just short the highs until market reaches our profit target and take the target and get out. So if I want to take this trade, I'm just going to put my profit target in this zone, which is the bottom of the day, and then put my stop loss above this level and just wait patiently to see what happens. So let's do it right now. We are in this vertical line is the New York session. It's open. There are a lot of cash in the market right now, and I'm going to trust my process. I'm going to just sell, put a sell limit here, okay, and maybe a little higher, okay, and then I'm gonna just put my stop loss above this level. If it triggers my short setup, I'm going to show you and put some shorts and updates on the YouTube. So please, guys, don't forget to hit the like button and subscribe. I'm Shadian again, and every night, every day, I'm going to share my viewpoints, my strategies, and analyze the market on EUR USD, S&P 500, Bitcoin, and also XAU USD, because these are my favorite markets. So I have begun with EUR USD right now, but wait for other markets to get released very soon. See you.